knowledge, power, and control. At the end of the 19th century and the beginning of the 20th, these three concepts were embodied in a single name, J.P. Morgan. He was not merely the owner of an enormous fortune. He held the pulse of America's most profitable industries and, at critical moments, made decisions that determined the direction of the nation's economy. Sometimes a single signature of his was enough to keep a company on the verge of collapse alive. At other times, one of his decisions brought about the end of massive holding companies. To some, he was the dark face of power. To others, the last fortress keeping order standing. But everyone agreed on one truth. J.P. Morgan was a figure who surpassed his age. This is the story of the man who shaped the backstage of modern America. John Pierpont Morgan was born in 1837 in Connecticut as the child of a wealthy family located at the very center of the financial world. His father, Junius Spencer Morgan, was a respected international banker with strong connections on both sides of the Atlantic. From the very beginning, it was clear that John's future would take shape in finance. Therefore, his education was not accidental, but deliberately designed as a planned, long-term investment. The best schools of the era, private tutors, and a European-centered perspective became part of his life from an early age. But behind this privileged start was a difficult childhood. Morgan was a sickly child, isolated from his peers. He spent his time not in games but with books and numbers, and this early loneliness formed the foundation of the mental discipline that would define him later. When his health problems increased, his father sent him alone to the Azores. Nearly a year spent away from his family gave Morgan patience and resilience. The foundations of the composure he would display in times of crisis were laid during this period. By 1857, at the age of 19, Morgan had completed his education in Boston and had closely studied European financial systems in Switzerland and Germany. Thanks to his father's partnership in George Peabody's firm, he began working on the famous Wall Street, reporting political and financial developments in America to London. Despite his young age, he analyzed not only data, but also market psychology and political risks. However, his father was concerned about his impulsive and risk-prone temperament. This concern materialized in 1859 when Morgan bought an unsold shipment of Brazilian coffee in New Orleans with company funds. Although he made a profit, this move was recorded as the first major clash between conservative banking and aggressive finance. In 1861, at the age of 24, he decided to chart his own path. He left a secure bank and founded his own company. That same year, he married Amelia Sturgis and, for a short time, found peace in his life. But this happiness did not last long. Amelia contracted tuberculosis and died only 4 months after their marriage. This loss created a deep and lasting fracture in Morgan's life. He devoted himself entirely to his work, and during this period, America was in the midst of the Civil War. In 1863, despite the mandatory draft law, he paid $300 to send a substitute in his place. He did not fight at the front, but he earned large profits from the war economy. At that time, he purchased 5,000 obsolete Hall rifles, considered scrap by the government, at $3.5 each. After minor modifications, he sold them back for $22 apiece. This transaction yielded over 600% profit, giving Morgan a fortune, but also causing major public backlash. This incident was the first sign of the controversies that would follow him throughout his career. By 1871, John Pierpont Morgan was no longer just a promising banker, but a figure of growing influence in financial circles. That year, he partnered with one of the era's most respected financiers, Anthony Drexel, to establish Drexel Morgan and Company. The company soon became an active financial center on both sides of the Atlantic. Years later, this structure would take the name J.P. Morgan and form the direct foundation of today's J.P. Morgan Chase giant. During this period, Morgan was less a traditional banker and more a strategic intermediary. He connected major European capital owners with visionary American entrepreneurs who lacked access to financing. He earned significant profits from these relationships. But over time, merely acting as an intermediary was no longer enough. He wanted to take risks, use capital directly, and become the decision maker. This pursuit led him to one of the most critical sectors of the era, American railroads. In the final quarter of the century, the situation in America was striking. In steel, Andrew Carnegie had built an empire. In oil, John Rockefeller dominated. But in railroads, the opposite was happening. Many companies operated on the same lines, cutting prices to survive, pushing the sector into instability. Morgan saw this fragmentation not as a crisis, but as a great opportunity. To him, the solution was not harsher competition, but consolidation and centralization. He bought financially weak railroad companies, restructured their debts, and gathered them under single entities. But he did not stop there. He demanded full control of the management of the reorganized companies, appointing top executives and personally defining long-term strategy. This approach was so systematic that it gave financial literature a term bearing his name, Morganization. This method described reviving debt-ridden companies through strict management, strong financing, and centralized control. Results quickly appeared. Companies became profitable, and stability spread across the sector. European investors began to see Morgan-controlled railroads as safe havens. Large amounts of capital flowed into America, and Morgan's wealth and influence grew rapidly. At one point, nearly one-third of America's railroads were under his direct or indirect control. Considering that about 60% of the American stock market consisted of railroad companies at the time, Morgan's weight on the financial system becomes even clearer. During this period, Morgan was notable not only for his economic power, but also his physical presence. His distinctive facial features shaped by rosacea and rhinophyma, his harsh gaze and authoritarian manner created a dominant effect in any environment. Many executives and politicians found him a difficult power to oppose, but the limits of this power were tested in 1901. President Theodore Roosevelt sued the Northern Securities Company, formed under Morgan's leadership, under the Sherman Act for eliminating competition in the railroad sector. The company was dismantled by court decision, delivering a significant blow to Morgan. Yet this setback revealed a larger truth. There were now political limits alongside economic power, and Morgan began shaping in his mind a far greater move that would affect the entire American economy beyond railroads. By 1901, America's industrial balance had become clear. Steel was the basic raw material of the modern world, and the absolute leader of the sector was Andrew Carnegie. Carnegie Steel generated about $40 million in profit annually and played a decisive role in everything from infrastructure to skyscrapers. But Carnegie now wanted to exit the stage and direct his fortune toward philanthropy. The only man capable of buying a company of this scale was John Pierpont Morgan. When Morgan said, "Name your price," Carnegie answered, $480 million. Morgan accepted without bargaining. This sale was unprecedented in size. But this move was not an end. It was the beginning of a much larger plan. Morgan merged Carnegie Steel with other major producers to create United States Steel. Valued at $1.4 billion, U.S. Steel became the world's first billion-dollar corporation. This figure equaled roughly one-third of the total value of the entire American manufacturing sector of the time. Through this structure, Morgan gained control over nearly two-thirds of American steel production. Thus, he became the decisive power in the two critical sectors of the age, railroads and steel. For Morgan, this meant not just wealth, but price stability, predictable costs, and a secure foundation for massive infrastructure projects. Morgan's influence was not limited to industry. He financed Thomas Edison's electrical ventures and contributed to the birth of General Electric by merging Edison's operations with competitors. Similarly, he played a central role in shaping America's communications infrastructure, which would later become AT&T. Morgan's management style was always the same, gathering fragmented competition under one powerful structure to create scale and stability. In 1893, the United States faced one of the most severe economic depressions in its history. Decades of rapid growth, excessive borrowing, and uncontrolled investments finally burst. Stock values nearly halved. Thousands of companies shut down. Hundreds of banks collapsed, and unemployment rose dramatically nationwide. The crisis did not remain domestic. Foreign investors began selling American bonds and demanding gold. At the time, the dollar was tied to the gold standard, meaning paper money had to be backed by physical gold. The government needed at least $100 million in gold reserves. But by 1895, reserves were nearly exhausted. At the most critical moment, only about $9 million in gold remained in the Treasury. This created the risk that the state would be unable to pay its debts. At that time, America had no central bank. There was no institutional mechanism to manage such a crisis. President Grover Cleveland knew this was a turning point for the country's future. Traditional methods, such as issuing new bonds, were no longer enough to buy time. At this point, Morgan entered the scene. He went to Washington, met the president face to face, and proposed an unconventional plan. Morgan would form a private consortium of the nation's strongest bankers and, using European capital as well, rapidly reinforce America's gold reserves. His proposal was to provide $65 million in gold in exchange for 30-year gold bonds. Thanks to an old Civil War-era law still in effect, President Cleveland could sign the agreement without waiting for Congress. After the signature, Morgan sent a telegram to his team in New York. According to legend, all the bonds were purchased within 22 minutes. Markets calmed almost instantly. Confidence returned. Panic stopped. America avoided default. Morgan not only suppressed the crisis, but also made huge profits by acquiring gold bonds at favorable rates. This caused public discomfort. People began questioning how a nation's fate could rest in the hands of a single banker. Yet one fact remained unchanged. At that moment, the man who kept America standing was J.P. Morgan. A similar situation occurred again in 1907. Bank runs began. People lined up to withdraw their savings. The government ordered tellers to count money slowly to delay withdrawals. The crisis was about to spiral out of control. The president was now Theodore Roosevelt, and his relationship with Morgan was far from good. But the situation was so serious that ideological differences were set aside. Roosevelt asked Morgan to intervene. Morgan gathered the nation's largest bankers in his library in New York, determined which banks needed capital injections, and did not end the meeting until agreement was reached. As a result, private banks and the Treasury injected millions of dollars into the system. Confidence was restored. The banking system was saved from collapse. At that time, Morgan was 70 years old and suffering from severe illness. Yet he once again saved the American economy from disaster. However, these rescue operations did not diminish Morgan's power. They made it more visible. Public opinion began asking, why did a nation's economy constantly need a single private financier? This questioning took formal shape in the Pujo Committee investigations. The committee investigated the power of the money trust on Wall Street, and Morgan became the symbol of the structure. He testified before Congress as the central figure of the American financial system. This process exhausted him psychologically. He suffered nervous breakdowns, and his health deteriorated. Interestingly, he was originally scheduled to be on the Titanic's maiden voyage, but canceled at the last moment due to health problems. The Pujo Committee's findings clearly showed the need for a permanent solution. Crises could no longer rely on individuals. This realization paved the way for the creation of the Federal Reserve System within a few years. Morgan did not live to see the results of this transformation. He died in Rome on March 31st, 1913. After his death, his son took over. For decades, J.P. Morgan continued to grow through mergers and acquisitions. In 2000, it merged with Chase Bank, becoming J.P. Morgan Chase. Today, with assets of approximately $3 trillion, it is one of the largest banks in the world. John Pierpont Morgan is remembered as a controversial figure. Some see him as a greedy monopolist, others as one of the architects of modern America. But one undeniable truth remains. From railroads to steel, banking to electricity, Morgan was one of the most decisive figures shaping America's economic infrastructure. His legacy continues to live at the center of the global financial system.